Happy Thursday to you. We welcome you on this webcast of Trading the Trend. My name is James Boyd. Alongside in the chat is Connie Hill. We welcome her and all of you. We have with us Ron, Prakesh, Dom, Gabriel, Speak the Truth, you always should, and Sunita and many others. Welcome to all. Now remember, Connie and myself, we do post educational content on X. There's my handle at James Boyd CS. Also note that on that handle on X, you can see some of the scripts that we actually talk about and show during my webcast. Connie, if you would, please post your handle in the chat. That way they can click on it and follow you as well. Now, as we get started, we always ask the question each week, what trends are you riding? Are you riding or what you are invested in? Are they really things that are trending? Do you want to own those? That should always be the question, right? Now, just real quick as we get started, remember that when we talk about examples, our examples will be stocks. Tomorrow they will be ETFs. I'll be riding solo tomorrow on the ETF session tomorrow at 9:30 a.m. Eastern. Kevin will be doing the advanced option or concept workshop in New York City. If you'd like to learn more about ETFs, join us live only tomorrow at 9:30 a.m. Eastern. Today, we talk about stocks and options. Remember, when we talk about stocks and options carry a high level of risk, not suitable for all investors. The information we talk about is done for general informational purposes only. Our examples that we do together as a class and learn from is going to be done in the paid money software version. Understand that when we talk about investing involves risk. And when we talk about short options like selling calls, like covered calls or cash secured puts, those could be assigned anytime up to expiration, regardless of the in the money amount. These are American style option, not European. Now, European can only be at expiration. Now, when we talk about examples, I want to go look at just real quick some of the things we're seeing on the indexes. Then we're going to move down to sectors. Then we're going to move down to a little bit of some Dow stocks that are getting a little surprise here today. And then we're going to also talk about a lot about managing positions, whether it's profit taking, whether it's adjusting stops, whether it's manually exiting or just exiting due to time, etc., or loss. So I want to talk about that theme of exiting quite a bit here today. Now, just real quick as I bring this up, let's pull up, I'm going to pull up first off, let's go to the NASDAQ, okay? Now, NASDAQ, if you kind of look at this, it's kind of been waffling back and forth inside this range. I mean, it's not completely unusual, as we've been saying, that you get a 1 to 2 week pullback in a trend. Not completely surprising, okay, if we're talking about trading the trend. The movement we see on the NASDAQ, again, when we're below the moving averages, the candlesticks are, the price just kind of drifts lower, right? If we want to get a turn on that short-term strength, we need to get the price above the 10 at a minimum. Price above the 20. Give me a dadgum crossover. I've been patient. Isn't that how you feel? Now, you're going to see that that's a decent green candle here today so far. Okay, now, semiconductors. Talk to me. Did we get a little move on semiconductors? Maybe. Okay. Now, also keep an eye on the cybersecurity stocks, software stocks, etc. Those have gotten a pretty decent push here as well, and we'll show some of those. Now, so NASDAQ, kind of not bad. Okay. The SPX. My gosh, what do you notice? Now, remember, this is always like when you look back, you're like, oh, yeah, this was the bounce. That's where you should have gotten in. We talked about that 2 days ago, how, it's always easy to look back on a moving average crossover and saying if I was watching, that's where I would have gotten in, but I didn't. Okay. Well, that moving average turned green about 2 days ago. Now we're starting to get a pinch. When we talk about step one, 10-period moving average going green, it did. Step two is either, not both, either the moving average crossing or the 20-period moving average going green. We don't have that yet, but if we get the price above the 10, the 20, which we already have, that step two, step three could be sooner than later. Okay? We are not even that far off. Now, wait till I show you the VIX. You're going to fall off your chair. Okay? We are a whopping 1% off the high. That's it. Okay? So this move, if we just got a 1% move back up into the market, we'd be at the brand new high. And everyone would be going, yep, brand new high, brand new high, brand new high. More of the story is when you look at the VIX, the Bears, I'm not talking about the Chicago Bears, excuse me, Indiana Bears. Okay. So some bitterness there in that area. My gosh, 14? So the Bears had some opportunity to kind of like, buy some puts and buy some puts. Market's going down, the top's in, everything's horrible, and the VIX just falls apart. Okay. Now remember, VIX dropping down or staying down. Okay. On the mat, so to say, 1, 2, 3 count. Bullish moves it more in the market. So this is, we're talking about today. Better movement here. Now, did something help the market? Yeah, of course. Okay. We had the NVIDIA earnings yesterday, which NVIDIA, if you took the market cap of NVIDIA, it is the total market capitalization of many stock markets in the world. Okay. Or daggum near close to it. So NVIDIA almost by itself, big moves. We'll show that in just a sec. Super quick on the Dow Jones. Decent bounce there. Nothing different than what we saw in the SPX. And if you look at the Russell. Now, I said the one thing on the Russell, we're kind of like, I'm going to use the word where it's kind of waffling back and forth between support and resistance, how I drew it. This is your classic on the daily chart. It's going to look like it broke down. But then when you look on the weekly, the end of the week, it doesn't really show that. This, I would still say, is in that support range, trying to get a bounce, but lagging. Not as strong as the others, okay? But obviously, if this one actually comes back to the upside, that animal spirits or people, investors taking risk, that would be a welcome sign, wouldn't it? Now, super quick, when I show you, now remember, we already talked about the NASDAQ, okay? When you look at the technology sector, this ladder of a candle, I'm going to call it a ladder, pretty big, okay? Now, we'll show some of the stocks in just a second. When we also take a look at financials, those have been very sticky near the resistance area. The area that has been tough today has really been discretionaries. And that discretionary area has been not helped by Nike. Where's this going? Okay. Amazon hasn't been great, down 443 and taking out a leg of support. Mickey D, golden arches, okay, double top formation. It's been on the sign for years. And if we actually take a look at, let's say, also Walmart hasn't been helpful, but the Target, okay, TGT, that's been the horse, okay. So discretionary is kind of struggling a little bit. So main theme we've talked about so far is it's actually been the return of some tech. Now some of you are like, thank heavens, I hate other areas. I just like tech. Well, maybe there's some opportunities as we're going to look at those right now. Real quick before we go there, gold is still being kind of stuck in that area of 47.32. Is it a higher low? It's going to be pretty hard to get gold to actually go up if technology is smashing to the upside, but still sticking there, okay? The one that we're watching quite a bit, what do we have here? Pokey above the resistance. We've been watching that 69.20, and I just turned my back, and then I turn around, and there she is, recapturing the 70 threshold. So think of silver almost like small caps, right? If you're buying silver, which on a percentage basis is more volatile, okay, kind of investors speculating those precious metals might go higher. And the one we talked about yesterday, which is the copper. Copper hasn't moved, okay? It's been staying near the high, never sold off like gold did, which kind of tells us something about globally about economies, et cetera, and demand and things like that and supply. So this is still a theme of trading the trend. Now, just really quick, okay? I want to go back to the one that kind of maybe helped the tech market push a little bit. Let's start here for a second, okay? Now, when we look at NVIDIA, and I see some questions, so we're going to answer those, but we got 222 on the earnings per share, okay? The actual is 222. The estimate was actually 209. Go and actually look at the earnings release. But the price movement from that earnings, it was a pretty decent gap. Now remember that gap, when we get a green candle, to the upside, we're going to mark the open price. Okay. So that now becomes the new shorter term support level. Now, we do all the trades in the class. So what I want to do is kind of when we go back to a 3-year weekly chart on this and say, what do we see? Is this something in a trend? Now, sometimes you can get it where it runs up and it kind of consolidates for a little bit, whether it's a channel, a cup and handle, a flag, a ascending triangle, a pennant, and so on. Is this something on the weekly chart showing a bounce? Well, remember, the bounce, if we're talking about red green candles side by side, I mean, the last time we had a red green candle side by side, it was right there. This is the second time. This has been 2 times now where we've been building. We pull back to the upward trending 20-period moving average and then bounce. Now, you got to ask yourself on the palette, so to say, or the toolbox of strategies, how does someone maybe want to play it if they want to be bullish? If someone said, James, I want to have a strategy that is the most sensitive to price movement, it would be a stock position or a long synthetic. If someone said, I'm bullish, but not that bullish, they might say maybe like long call, covered call, long call vertical, short put vertical, and so on, right? Each one of those strategies, like a golf club, has a different strategy profile, pros and cons. Now, let's say we actually said, you know what, James, I want to try to use some of the volatility. What is this volatility? Let's go take a quick peek. The volatility on this right now, it's still in that mid 30-ish camp, which is not small, okay? But it is tech stock, so it's not completely amazing. If we went back and actually said, okay, what do we got? Now 188 million shares in the first 3.5 hours-ish of the market, almost 4. 188 million, okay? So if we bought 5 shares, there's a pretty good chance it might fill. Now, when we look at the spread, you got 10 cents there, you got 10 cents there. We go down, PIA, okay? We're going down to October's. We're going to go look at 15 cents, and we have 15 cents there. Now, I'm going to go kick the can down to October. Why? Well, because a lot of trades we've been doing lately are really in the month of September, the monthly options, and we also have only 22 days left. So, in this case, what we're going to do is, remember, we don't do option trades if they have less than 20 days, at least for monthly options, okay? So we're going to go down to about the far end of the range, 20 to 50 days to expiration, October's. Now, remember, if we sell the pets, okay, pets, we're going to go down and try to sell the 220. Now, wherever we mark that chart, it's 222. Now, they don't have a 222 strike, but they actually have the 220. So wherever we sell the put, that's where we think the price could stay above. If we sell the 220, we can now ask ourselves the question, well, how much risk we could take? If the risk we could take is, let's say, $200-$300, we're going to be doing a $5 wide spread. If we could take a risk of $600, $700, $800 of risk, we're going to be doing a $10 wide spread. Okay? So if I said, hey, we could take the latter, what I'm going to do in this case in the paper money account, we're actually now going to bring up, let's say, NVIDIA in the paper money account. We're going to type in NVDA. We're going to pick the Octobers, and we're going to sell the 220 and buy the 210s. So trade example number 1, sell the 220, buy the 210s, break even at expiration. Okay, it's going to be, in this case, 287 credit, 217.13 is the break even. There's the number. Double check the RR, return on risk. Return potential, 287, divided by 713, 40%. Not completely shocking. Implied volatility of, let's say, 35%, plus, talking about a tech stock. The other thing is, why a little bit higher than normal? There's 50 days to expiration. Okay, so trade number 1 there. Now, I want to go back to just real quick a question that was asked, which is from AE. He says to think, okay. Yeah, so, okay. Thought this was a different type of question. To Schwab clients, this coaching is free. Other charge exorbitant fees for what coaches offer us at no charge. We couldn't be more thankful with Schwab and invaluable knowledge. Look, I wasn't with Schwab initially. I was trade on my own. It is helpful to actually see someone who has a lot of experience in different products over many, many, many years, gosh, dadgummit, it would have been helpful. If someone said, James, would it be a good idea to follow your path, no coaching or training for the first 7-ish years of your trading? Probably not. I mean, most people would throw in the towel. Me, I'm kind of like Jax. Once I get that bone in my mouth, I usually want to, it's mine. Okay. When you have a goal, you could probably weather through some of that, but, yeah, absolutely. Thank heavens. Okay. Now, the one thing is just real quick, other question which we had, let's also go back to, I want to go back to just real quick, one other one before we look at a trade example, okay? Now, there's a couple things that are kind of happening that are kind of interesting that we've been noticing. Some of the stocks that had been going down quite a bit, really they started to make some pretty big reversals, to say the least. Salesforce has swung back to the upside, gap on the earnings. Microsoft is the one that we paper traded twice. That's had a pretty decent move to the upside. I mean, a little kind of cross back, right? The other one that we're going to kind of probably look at as far as a trade here is IBM, okay? That's the kind of one that's actually maybe trying to get a little bounce, has a support level 229. Let's hold that thought for a second. Goldman Sachs is the one we're kind of looking to see, can we make a higher low post the diagonal breakout? Travelers is also in that mix as well. Those are both Travelers and Goldman Sachs, financial companies. They're both right now trying to make the higher low. Other stocks that were pushed down, to say the least, that have fired back, Adobe, okay, ADSK, okay, pretty decent move on ADSK. Now, okay, kind of a little basing pattern reversal there. I'm also going to bring up another one, Palantir, okay, pretty decent move there. And if we also go look at any others, I'm going to hold it right there. Okay, now, I want to go back, so probably of the ones I mean, they're bullish, okay? If we're talking about one that's had a little bit stronger trend for a longer period of time, it's probably Palantir. But I want to go back to just real quick, a precious metal example. When we look at the SCCO, okay, Southern Copper, that's the one that's been smashed right into the area of resistance, and it's like stuck, okay? Now, remember, if people want to sell, they have all the chance in the world to sell. If there are sellers, they're not able to overwhelm the buyers that are holding the price up near the resistance area. Now, super quick. Now, let's say you said to me, James, I don't trade options. I may be a stock investor and I want to buy some shares of the stock thinking that price might go higher. Now, when you look at this, what you're now going to notice is there's a sideways channel here. That channel was from about 170 maybe to about 200, okay? About 30 points there. If we kind of did something where we kind of said, look, fib it, okay? And if we go back to this, what you're now going to see is I'm going to draw, now I'm going to do two ways, okay? If we go from body to body and we look at that, it's going to be 260. If I actually take this down to not the lowest point, okay, it's going to be about right there, 250. So if you said, look, I want to set a little shallower target, it would be right around 250, okay? Now, if we look at this, let's say the investor said, look, I'm a stock trader, okay? Now, option number one is the investor might say, I'm going to buy the basket of stocks. That's tomorrow. If someone said, look, I'm going to buy individual company name, you better get the individual company name to participate with the rally, if there is one. We're going to right-click on the chart or right on the trade tab. And what we're going to do, trade number two, we're going to right-click on the ask price, buy custom, and now what I'm going to do is go with OCO bracket. Okay? Now, if we bring this up, we're going to first get a little older here, okay? So I once I have it in my head, I got to hurry and write it down, okay? 250. Okay, limit day GTC. There it is. Now, this stop underneath, okay, let's go back to that. If we look at that SCCO, now if we said I want to set a tighter stop, well, probably the tightest stop that we would set is underneath the last higher low. We could easily see where the higher low is because that's where that bullish engulfing candle is right at the open. The open price of that day was right at about 212.30, less 2%. So that's going to be right at 208.05. Now remember, it's saying if it goes down to that price or less, sell the stock. Okay, now, if we take a look at this, okay, you're now going to see we got a target price, we got a stop, and then we just need to go back and say, okay, capital that we're going to put in, let's say we put in $5,000. That's not a full position, okay, that's about maybe 2/3-ish. It's going to be about 22 shares of stock. I'm just going to type in 22 shares of stock. There it is. Now remember, if this stock breaks out to the upside, so let's say we wake up tomorrow morning and copper hits a brand new high. Okay, we wouldn't be surprised to see Southern Copper up. If silver goes up tomorrow to 71, 72, and we look at Pan American Silver and say, oh my gosh, it's gapping $2, $3, it wouldn't be a surprise. Okay, that's the idea. That's what, the stock doesn't move by itself. Okay, it's what are they selling, and are those prices of what they're selling, are they increasing? Now, when I go to confirm and send, there it is. We talked about, again, how that stop works if it goes down to that price or less. Okay, now, if we take a look at this, if I come back to this, there it is. Now, by the way, if you said, James, could we kind of extrapolate this? Could you overlay and do a comparison chart? Go to studies. You could go to add, study, compare with. And if you said, look, I want to kind of see how this relates to the gold and silver index, it's going to show the gold and silver index as a line. The stock is going to be in a candlestick form, and you're going to be able to kind of see the correlation. That's what we're really trying to trade here, okay? Now, we know AM and MEM are the strongest correlation to what the gold and silver does, and they have been, but we're trying to kind of play some of these that have maybe lagged a bit that might try to maybe make up for lost time. Now, I want to also go back to just real quick a couple of things that kind of I want to talk about when we talk about exiting, okay? So let's imagine, for example, that we say, hey, look, I got some positions, and I want to kind of really see how they're doing. The first indication of how they're really doing, are the trends continuing, and where are the trends, is we would look at, for example, the trend column, okay? If we have stocks that are, let's say, in trend 3, this is really what we want, okay? Which means prices are above both moving averages. Now, the prices are above both moving averages. We would also like to kind of see the whole moving averages where those are actually green as well. And the counter, the number of days the moving averages have been green, they just keep getting higher. And that probably tells us something about if we have a green trend, like a number 3, and the moving averages are still green, and the duration of time continues to increase, then there's a greater chance that this profit loss is probably going to be potentially higher. You get what I'm saying? Now, what about ones that's not the case? If we said, well, what concerns us? Well, remember, 4 is actually saying the price is up above both moving averages, but up near resistance. Which one is showing that? Merck. Merck is one. Think of this maybe as an ascending triangle, maybe something that's up at maybe at the top of a resistance area. The key words are it hasn't fallen yet. Now, if all of a sudden the price starts to drop, you get into trend 5. The price is down below the 10, but it's above the 30-day moving average. We're losing momentum. Think of it like we're sitting on a raft and you just hear this. Okay. And if it keeps doing that, we're not going to be on the raft much longer. We're going to be in the water. Okay. And if, for example, if it shows trend number 1, the raft's already dead. Okay, the trend, it's died, and now we're below both moving averages. So if we said, is there one that we might be very concerned about, or maybe at least looking to profit take, it's Merck. The other thing that kind of tells us, hey, might want to pay attention, we had the red moving average. We have a red moving average. Now on the 10-day hold. And that is, how long has it been like that? For 1 day. Now, the other one that's kind of shown some negative is Johnson & Johnson showed a harder sell-off, trend 5, which we just talked about that, and it's had a red moving average for 2 days. So on one view, this kind of tells us, how's this doing? How are these positions doing? Most of them are good. The most concerning of these is Google, because it's been pushed down the most. Now, which one would you go look at first? Which one? I'll go look at the one that didn't drop yet first, that still has some profits, probably. So if I went and go look, let's say, go look at Merck, let's go look together and manage together. Now, we're married to our spouses. We're not married to the stock. We didn't fall in love with the stock, okay? We never, when we bought the stock, we never said till death do us part. We never said that. So we were using the stock or the option as an instrument to try to grow the capital, to maybe try to get the dividends. Merck, here's the position. So now when I go back and look at, let's say, Merck, pull this up, I want to now, there's been a decent little run here, okay? Now these little moving averages, oh, just go green. Go green. Go green. Now here's the thing. I think getting in for a lot of people is easier. For most of us, okay? And the biggest actually thing is, then people will say, well, I don't know when to get out. One of the reasons why we like the whole moving averages is it kind of shows us who's in control, the buyers or the sellers. If the moving averages are green, the buyers are in control at that point in time. You're going to notice on the top right-hand side, we're going to see that the moving average on the 10-period moving average went red. This is what we call strike number 1. If the investor said, look, I'm going to eject, which means we're going to go in and sell, and sell some more, we have that signal right now. So if we said, look, my job is to trade based upon, if we get a green moving average, I'm going to buy, the investor says. If I get a red moving average, I'm going to sell. I don't care what you think. And so that's what the technician is doing. They're only trading their signals. They're not trading thoughts. They're not trading opinions. They're not trading news. They're trading what's on the chart. Now, many of us like that. Now, sometimes that can kind of rub off in your personal life, and you got to remember that not people are not charts, okay? Got to be a little bit more patient with people. So, all right, I'll leave it at that. Now, here's the deal. If you look at this, if we said, hey, is there a sell signal? Yes, if we're doing on one. Now, if we said, well, James, I'm waiting for step 2 to sell. We don't have that yet. But the fact that the moving average, the price is below the moving average, that's step 2 could come imminently. Okay? So if someone said, look, I want to sell on the first sign of weakness, how do we sell? First thing we're going to do is stop the order. Okay? Second thing, what we're going to do is, now, by the way, let me throw this out here. If you said, James, I like to sell on step 2, it's not there yet, where would you put the stop? Remember, we would actually put that stop underneath that 8 or 10 day low, and that 8 or 10 day low is going to be way down here. If you said, I don't like that, you might choke the stop up underneath the 147 and try to wait to get the manual signal to sell. Okay? Now remember, if you got the price down below the moving average, both of them, that moving average, the 20-period moving average, is highly likely going to turn red the longer that we stay below the moving average. You picking up what I'm laying down? Okay, now here's the thing. What happens is we as people, we like to just be right. Look, we're theoretically right so far. Until we sell something, we haven't made anything. It's unrealized gain. Okay? So what we're now going to do is create closing order. We're going to sell. And now we're going to come in and say, look, try to sell at the mid price. If you're selling, you like to try to sell at a higher price. Confirm send. And send the order. And what we're going to try to do is harvest that 1635. It fills. We verify with our own eyes. Do not call your friend. Do not text your friend and tell him how much money you made in the pay money account. You want to make sure it fills first. A lot of times people say, oh, yeah, put my order in, it's going to fill. That's what you think. You verify. Now, let's go back to this. Let's look at the second one. The other one that we're a little concerned about is this one right here, Johnson. Now, remember, trend 5 is the opposite of 2. Trend 2 is when the price is swinging up above the 10-period moving average. Bullish momentum. 5 is bearish momentum. Boo. Now, if we take a look at this, and it's also telling us, hey, that moving average has been, for 2 days, red. Now, here's the deal. Well, I don't want to look at it because I'm losing. If I don't look at it, I'm not losing. Yeah, we still are. Okay? So now if I actually come back, now here's the thing. People will say things like, well, you haven't lost until you sell. Okay, sure. Okay, we can think whatever we want. Okay? Now, if we went back and looked at this, okay, and if I said, let's remove that just real quick, where's the stop? Okay? The stop is underneath the diagonal support. Why did we set it there? Well, we set it there, and I just want to make sure there's a clear objective of exit. Is this I'm trading hope or is it strategy? The strategy is we said, hey, if we come back down inside this apex of the triangle, we're going to try to allow some movement. Now, we're down $100 or $150 or so. We have a stop. Let's verify how far that stop is down. Let's just double check. We could probably move it up maybe a smidge, but not really. We're where we should be. So if we were auditing an account and said, is this trader trading a strategy or is this hopium? We would actually say this trader is trying to be bullish as long as it stays above the trend line. Okay, now it's down right now, okay, but it makes some sense of why they're trying to do that. So I'll give this one a pass right now. Nevertheless, we still have a stop though. Okay, so there's no stop. There is a stop, and if it goes down to that price less, it triggers to sell, could fill at a lower price. Now, the other one that was not as nice, okay, was Google. Now, Google, if you look at this, now we don't really need to talk about Google because this was an old fractional share example, so I'm going to skip this one. But if we look at this one right there, we could just pretty much drop that off. This is the example of a fractional share where it doesn't sell all of it, and it's pretty much down. So outside that, we really had actually Merck and we had Johnson & Johnson. That was the concern. Now, if you said, James, I actually don't have those on my monitor tab. Well, first of all, you might be set to, let's say, an old layout. The old layout is going to be like this. There's no column headings. There's no subsections of what strategy you have. If you go to new layout right there, new layout, you can categorize by what type of strategies you have. And you could also put the column headings on. If you already have the trend and things like that, you could go to that gear right there on the right-hand side. You could look through some of those scripts that you have and then add them to the right-hand side. Okay. Lisa actually says, JB, can you speak to, I'm wearing my Cubby Blue today, Lisa. Okay. Can you speak to investors versus traders at Trend 5? Okay, now, so when you kind of think about Trend 5, so if we go back to Johnson & Johnson, okay, notice if we took a look at Johnson & Johnson, a trader who is only trying to be in momentum, they are trying to be in the green line only, okay, so they're trying to be in this. They're saying, look, as long as you're giving me something, or give me a good chance to ride that trend and make some money, honey, potentially. That's where this is the trader, okay? They're just saying, look, I only want to be in for the filet mignon of the trend. However, if we pull back, I don't want to go through a flag. I don't want to go through the consolidation. I only want to be there when it's hot. So who does this where they let the stock pull back deeper without selling? An investor does. Now, you would sure hope that if the investor is doing that, they're not just buying a stock, but they bought a equity stake of a business, shares of stock, and they're pretty confident the business can grow, the fundamentals can improve. the trend could improve over time. This is more of an investor mindset where they're allowing the trend to pull back. That's how I would think about it. Okay. Now you might say, I think about it a little different. Well, tell us how you think about it. But there are some people that are literally just trading those little sections right there. They're just trying to ride those trends. That's all they care about. Okay. Now let's also go back to another example. So a couple of these other ones, when we said cybersecurity, let's pull it up on this. Cybersecurity, okay? CrowdStrike today, if you look at that, CrowdStrike right there. Earnings on that one, 31 cents. Okay, the estimate was only 4 cents. They got 31 cents. A pretty decent pop. Now, some investors might say, well, I'm going to wait 2 to 3 days to see what happens. Other investors might say, geez, I might use that gap up today as a place to maybe set a stop underneath. Now, if you look at its twin cousin, Fortinet, okay, you're going to also see that same thing. There is not earnings. Now, I'm going to, if you said, no, I don't want to do that, it just had earnings day, I don't want to touch that. Well, let's go across the street here, okay? If we look at Fortinet, you're going to see, if I go to analyze, go to the fundamentals, and it's going to be, you're going to see that this does cybersecurity threats. There might be 1 or 2 of those out there, right? Now, if we go back to this just really quick, there's a plateau, old resistance being new potential support. You got little resistance right here, okay? Now, what you're now going to notice is if I take a peek at this, okay, right there. Now, if we look at this, we kind of have a gap up. That gap as of this morning was at 160. Now, you might say, well, why didn't you get in this morning? Because we didn't have the class this morning, okay? We do all the trades in class so we could follow along together, learn together. Now, we might say, well, it's gone up so much. Let's verify that with own 2 eyes. You know, look, we're at the 7% envelope line, 10% dark blue. It is elevated. That doesn't necessarily mean we can't. We might just pick a strategy that's a little bit more price forgiving. Probably a more forgiving strategy with a built-in max loss greater than 0. Okay, or not that's just 0, the stock goes to 0. Short put vertical. If we can come down just a little smidge, maybe a third, a quarter, a third, maybe half of the candle, might even be a long cover. Since it's a little elevated, it is. I just want to kind of see what the spreads are. Now, spread on this, let's double check. We might like to do a strategy, but when you go look at the spreads, seems a little wide, or it is wide. That seems a little wide too. This one is wide. The one that we're going to kind of see that has something more along the lines, and if we look at the October expirations, or expiration, the monthly, the strike that has really the kind of the more bid-ask spread that we'd be looking for is probably the 160, 155. If I looked at, for example, given the 160, let's say 150, now, if we did that, we'd probably be saying, look, we got to make sure that we get the middle price. The middle of that, between bid-ask on both sides, is 167, okay? Now, if we take a look at this, what is the implied volatility for the October? It's 45. What does that tell us about premiums? They're big, okay? Bigger the premium, bigger the credit. Bigger the credit, lower the break even. On this one, now, by the way, if we did the 160, 150, that is going to be at 292. 292 and 708 are the max profit, max loss. Obviously, I would kind of feel dumb to even run this. 292, it's over 40%. 708, it's 41%. So, I mean, if we said high, we'd be 35 plus, 40%. We are. Again, that's because we're 50 days out. Implied volatility is higher. The strike that we're selling is the 160. That 160 has a delta of 31. Okay, so it's also kind of where you have higher volatility. You could sell farther down on the strike table, okay, or strike price, I should say. And if you look at that, I mean, that's how we're able to do that and still get the percentage. Now, if we went back and look at this and put this in the paper money account so we could follow it along, Fortinet, okay, bring this back up. Now, I chose Fortinet because Well, CrowdStrike had the earnings today. And if we actually said, hey, I'm going to sell the 160, buy the 150 in the paid money account, there it is. Okay, confirm send. Let's say the most we could lose is $800, but we can't do more than one contract. Okay. Now, let's also go back to just real quick to when we look at Fortinet, it's a stock, a company. CrowdStrike, a company. There is a ticker symbol that we talk about on Fridays. Come tomorrow and you'll actually see what ticker that we're actually looking at, where the investor might say, look, I'm just going to buy the industry group. Okay. Be aware of that. That's the stock is not the only way to play it, to consider. I'm going to go ahead and send the order. There it is. Now, I also want to go back to just real quick. I'm going to fast fire through a couple stocks and answer some questions. One of the other stock that we're going to keep an eye on. Now, remember, we saw silver. Oh my gosh. Okay. We're going to put one in real quick, and I'm going to do this in 30 seconds or less with OCO bracket. Now, one nice thing about kind of doing a stock trade off the charts is when you right click on the chart and do buy custom with OCO, you got an entry, it automatically defaults $1 higher, $1 lower. I'm going to change these to dated GTC for the PAAS example. If I did this, I'm going to send this. Now remember, just watch what I'm going to do. I'm going to send it. But what I'm now going to do is I'm going to kind of move up the targets. Okay. There. The stop, what I'm going to do is move it down. Do not click on the X because it'll cancel the order. I'm going to move the stop down to about 51.14. So I'm kind of visually moving them down. And remember that 51.14 where I move the stop to? Saying sell if we go to that price or less. Has it filled yet? No, the green order is still there. If the order filled, that would not be there, and all you would have is the target and the stop. So we did the SCCO and we did the Pan American Silver. If overnight or even going into the night, we actually start to see silver get, let's say 71, 72, 73, lets us know that probably, 5 o'clock Eastern, 7 Eastern, 8 Eastern, some of these precious metal stocks might gap trading off what the price does. Okay. Bill, yeah, so Vic, you're right on that. Yes, on the ticker you gave. Yes, on that. Okay. Now, Vic also says Pan W. Let's pull it up. Pan W. Okay. We'll send that. Actually, we already did it on the paper trade. Pan W. What do we got? Vic brings this up. Let's show what it looks like. Now, Pan W is another one that actually has earnings on the 1st. But again, you take a look at that, that's a pretty decent bounce. And so here's the deal. If you kind of look at this, go back and look at the last couple times, right? If someone says, look, I'd like to get in on a good bounce entry. Well, what does a good bounce entry look like? Red moving averages. That's what it looks like. Now, I'm going to tell you what I've seen. When the price is dropping and the moving averages are red, most people mentally check out. But when you see the red moving averages, that's when you want to be paying more attention, not less, more. Yeah, but it makes me depressed when I see the price goes down. No. Not if you're looking to get in. Not if you're an investor. Okay? If you're seeing the red moving average, the price below both, the price dropping could be that opportunity. Okay? So you got to program yourself to say, look, red moving average is not bad, especially if I'm looking to get in. Now, I agree with you. Pan W getting a decent bounce here today, as are many stocks. So I'm out of my time here today. Our focus here is we want to kind of really talk about just kind of being sound, exiting. Okay, just not caring what do I think, what is someone else, what do they say, just trading the chart. Okay, and really when we talk about trading with technical analysis, that's what it's about. Okay, now we did the example of Pan American Silver, SCCO, the example of NVIDIA, and also Fortinet as well. So 4 new examples. Coming up next, we have Brett Crowther that will be doing short verticals. Coming up at the top of the hour, if you've not subscribed, do so. It's free right on YouTube. If you enjoyed today's video, click the thumbs up. these things we talk about as far as trade and trend, they're very important for learning, not just investing, but trading, and also using maybe a different array of strategies for different purposes. Now, also remember with what we discussed here today was done for example, illustrative purposes only. Remember that all investing involves risk, and this has been the class on trading the trend. And it's really up to you on what trends are you riding. Are they the trends you want to ride? And if they're not, maybe you try to align yourself to those trends you do want to be in. Okay, you're not married to the stocks. It's your decision. Thanks so much, Connie, and thanks to all of you. And with that said, have a great day. Take care. Bye-bye.